Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the TheoTrade nightly video for the 10th of February on a very active trading session here in 2022. Three letters CPI, Consumer Price Index, much hotter, much higher than expected, and that translates into what we know. We've talked about it at TheoTrade, but it's official now: inflation. Inflation's here. It is not transitory. It is real, and the Federal Reserve must address it. And they will address it by raising rates, and probably more aggressively now with this number, and of course if any other producer price index and other future reports come as hot or at least as inflationary as this one. And that's what sent the market into a strongly volatile trading session today. But updating us from where we were last Tuesday, we talked about the middle of the middle. That's still in play, and that is still the case at the moment. Again, at the moment. We will see whether the next move of the market throughout the remainder of February, just quickly before we get into a little more details and look at some stock scans and of course the bond market, whether we see the market push up to here, that would be that, or back down to 4,300. And that's a similar logic to where we are or have been the last few times. Think about this again like a distribution or a bell curve, where the middle, or at least of that range, is about 4,500. That's where the S&P is, and the same logic takes place in the SPX. If we push outside, we'll start to see where these inflationary pressures might hit a little harder, or where it might soften the blow. That's going to be the NASDAQ. So technology sectors or technology stocks in general, NASDAQ being the larger technology index, and that middle, we're actually making lower lows. So we have to expand that out. And if we're thinking about the S&P, that NASDAQ same logic would be about 15,500. The NASDAQ trades here. Again, S&P is toward the middle. NASDAQ is weaker. And that is in large part because if the interest rates continue to rise, that will put pressure on technology stocks in general. Also, the XLK is our technology index, which is similar to the NASDAQ or the QQQ. If you want to trade options, you might do so in the QQQ. And that trend line was broken earlier in the year. Outside of that, we have the Dow mini futures closer to the middle. Again, keep in mind for comparison's sake, the NASDAQ is down toward this. And the Dow mini futures, the Dow Jones, that's just 30 stocks. But that's toward the mid to upper range, or I should say middle range. And the other is the Russell, which broke its midpoint and now trades under. That's the big picture for the equity futures in crude oil. That is something that is strong getting stronger. And if inflation is a concern, you might see increased commodity prices across the board. That was a big discussion in 2021. In the earlier part of 2022, the main commodity we look at here is crude, which is pushing up new highs, of course, just recently in 2022, but we showed this on the other perspective. If we go back to a monthly chart, and again, we're looking here at the continuous contract adjusted, but that will be new highs not seen. How many years must we go back? Let's try 15, back to this 2014 period when crude oil traded near the 100 per barrel. While we're on the topic, gold on a monthly perspective is at highs, comparatively speaking. Now again, keeping the thought process, it's in the middle of the middle, but that perspective does go back farther, the last more than 10 years, and gold prices were around 1900 in 2011 and 2012 before falling all the way to 1100. And then over the last 6 or so years, gold has increased, almost doubled, to 2000, and now it stays stable at the midpoint. And we'll go back to our daily chart now, near 1800. What is in play for the bond market? That's, I think, our focal point for the next few weeks or so. The bond, I'm looking at TLT, and that's a tradable ETF. You can also look at IEF, which is a little shorter term, dated iShares fund, and that is down at the lows. So TLT and IEF is closer to the 7-10 year, and the TLT is closer to that 20 or 30 year bond, or in this case note. Nevertheless, the bond prices are downtrending, getting weaker. On the exact opposite, or on the flip side of bond prices, bonds becoming less valuable, downtrending, lower lows in price, we can look at TNX. And TNX is our 10-year U.S. Treasury note yield. Now, no, the Federal Reserve does not raise the 10-year Treasury note yield or the 30-year bond, but they do raise rates on the Fed funds rate. And that, in general, does trickle up the yield curve. In simpler terms, higher interest rates, and we have certainly seen higher, are in play and with an uptrend on the weekly chart. Not only do the fundamentals, or the Fed, or the news, or the broader narrative support higher interest rates, the chart does as well. And that just suggests higher highs and higher lows, and an increase in the yield fits right in line with what the Federal Reserve must do, will be doing, is telegraphing that they're doing, but they may have to do so more aggressively because inflation cannot be swept under the rug. Once again, it is not transitory. It is here and it must be combated per the Federal Reserve. And that's just interesting of all of us here that the 10-year Treasury note has pierced above the 2% level. And if you are looking here in Thinkorswim, if you use the TNX chart, it is the 10-year Treasury yield index. It is quoted in tens. 30 refers to 3.0%. 20 refers to 2%. And of course, 10 would refer to 1%. And the Federal Reserve did slash rates, or were cutting rates, and have kept them low, but they are now in the policy of raising. And this is a longer term type of a play, but it does affect us on the short term swing, intraday to a lesser extent, but definitely anybody with duration positions will be affected by these new developments and this continued, assuming it continues, to the upside in yields. What might be a benefactor of higher interest rates? In general, financial stocks. And that can be seen just in a quick video here tonight with the XLF, our financial sector. Of course, you can take a look at individual stocks, Morgan Stanley, Goldman Sachs, all the ones you might be interested in looking at or trading, but they will comprise, each one, the financial index. And they all have different financials, different fundamentals, and other components, but nonetheless, in a general sense, the sector, financials, could benefit from a rising interest rate environment. And by the flip side, the technology sector probably will not fare as well. Other sectors can be impacted differently in that rate environment, and of course we'll discuss those in future sessions. As we look beyond the market, I promised I'd look at some sectors, and earnings for the most part is behind us. Just quickly, in terms of earnings today, it was Coca-Cola, Linde, at Philip Morris, and Duke Energy, and those are the ones that reported before the bell. So we had to have a big move in some of the stocks. Disney was a recent report, just recent earnings report as well. It's highlighting, if you ever want to be curious or ever are curious and want to see where the economic events, you can go to the Market Watch tab, go to the calendar function, and be sure to go on a weekly basis or maybe even a daily basis. And that way you'll see exactly what stocks are in play. PepsiCo as well. But back to the charts and back to the scan. So not a lot going on with the earnings this week. Certainly not when compared to last week, with major market cap names reporting within a few days of each other. Now, strong stocks getting stronger. In the S&P that was weak, all equity products were weak in a volatile session today. We're down, in this case of the NASDAQ, over 2%. Most were down around 2%. But which stocks are outperforming? Which stocks made new 52-week highs? Might not be surprised to see that most of them are in the financial sector. Bank of America, Wells Fargo, Morgan Stanley, and Bank of New York Mellon, so on and so forth. Those would be some of the beneficiaries of a higher interest rate trajectory or higher interest rate environment. So just quickly noting, stocks making new 52-week highs, there are 33 of them. And just for time's sake, I have another scan of stocks that are making new 52-week lows in the S&P 500. Not a lot of them. This could change in the future, probably will change in the future. But right now we have PayPal, Triple M, APD, and Lumen. 4 stocks in the S&P 500 making new 52-week lows, and we'll take a look at one of them, and that is PayPal. That is a downtrend, a very, very weak stock getting weaker as seen on the daily, and we just saw the weekly. But on the other hand, a couple of examples of strong stocks getting stronger. Bank of America. We'll take a look at AbbVie Labs, Wells Fargo, Morgan Stanley, and MetLife. Those are making new 52-week highs per the scan, and we keep a tab on some of those stocks, especially big market cap names. It is a volatile week. CPI, big news, big outcome. It's Friday. We'll see how the market shakes and if the volatility stays. Have a good night. Be safe, and we'll see you soon.